Hello there. Welcome back to grade 11 accounting. In this video, we want to look at a March 2024 question paper, and we're going to look at the question paper from province of KwaZulu-Natal. So, according to our question, we're going to start with question one, which is 21 marks, and obviously it requires you to spend on average 19 minutes on that question. So, on the first question, we're going to look at creditors reconciliation. Given the first part of our question, which is write a sentence to explain what transactions related to creditors are recorded in each of the following journals or ledgers. So you are given a creditors journal, you are given the creditors allowance journal, and you are given the creditors control, and lastly we have the creditors list. So our question is us to write a sentence to explain what transactions related to creditors are recorded in each of the following journals. So remember, creditors, these are businesses or individuals that we owe money as a business. So remember, we bought goods from credit from these individuals or businesses. Now we owe them, so they are our creditors. So basically, if we try to go to other section in terms of what explanation do we have according to this credit journal to credit list. We have our answer section whereby the creditors journal, the explanation that we have is that it is used to record purchases the business makes on credit. So basically, that's a credit journal. All purchases that we make on credit are recorded in the credit journal. Then 1.1.2 credit allowance journal records the terms of allowances requested from the business creditor. So remember, we as we buy goods on credit from our creditors, and we got those goods are maybe to be substandard, and for many other reasons, we can return those goods to our creditors. So those are the creditors allowance. So they are supposed to be recorded in the creditors allowance journal. So the third one is called the creditors journal, a record of all credit purchases, payments made, and allowance made with all creditors to keep a continual record of the amount owed to the creditor. So you see that a creditors control is just an internal control procedure whereby we are saying the balance that we are supposed to find in the creditors control should be the same with the total of the creditors list. So basically, that's the scenario that we should have, so that we see that there are no omissions or errors that transpired. So basically, it comes as an internal control procedure. Then we go to the last one is creditors list. Record the total owed to each individual creditor and the total owed to all creditors. And then being that the total can be compared in the creditors control account in the general ledger for internal control purposes. So basically, creditors list, we are listing the creditors that we have separately, that is individually, and we try to see how much money each and every creditor does we owe to them. So basically, that's the creditors list. So you see that if we add the total of all the creditors list that we have, we are supposed to get the total that we are owing as a business. So basically, that's what we have. So that's 1.1.4. So we go to the second part of our question, which is now 1.2, and it reads: refer to the information provided below and reconcile the statement received from government sellers with the creditors ledger in the accounting records of our winning stores for January 2024. So we can take note that our question requires us to, if you go down there, you see that the requirements is the reconciliation, to reconcile the statement received from government sellers with the creditors ledger. So basically, that's what we have. Then we give the information which is we will source received a statement from code-based sellers stating that an amount of 49,050 was owed. So 49,050 becomes the amount that is reflected on the statement that is coming from code-based sellers. Remember, we are buying goods as a business from code-based sellers. So code-based sellers send a statement which is showing that Wimbledon source is only 49,050. So this is going to be our opening balance in the bank in the creditors reconciliation. So basically, that's what we have. So basically, we can just try to reflect that this balance that we have here is going to be the opening balance as we prepare the reconciliation. So next sentence is according to the creditors ledger in the accounting records of public source, an amount of 56,425 is owed. So this is the amount that is also we are going also to start with in the representing the total that we have in the ledgers. So basically that's what we have. So basically we are seeing that the balance that we are having on the statements is different from that is in the ledger. So basically what is supposed to happen is this balance will be the same with this one. So if they are different like this, it means that there are some errors or omissions that transpired during the period that we need to correct. So by correcting them, we need to prepare the reconciliation so that we reconcile the two balances. So basically that's what we have. So basically what we are trying to say is contents of statements, statement of account should be the same with contents that are in the ledger to say with their own mistakes that transpired. So we go to the next sentence saying Gobias was sellers email or statements of their data on the 25th of each month. The amounts owing are expected to be settled by the last day of the month. So it's also very important to take note that the statements is emailed on the 25th. And obviously we know that there are days that are after 25, 26, 27, 28, depending where the month is ending. Those transactions won't be on the statement, which means they need to be updated as we do the reconciliation so that we update them in the reconciliation. So basically, that's the scenario that we have. So we go to the additional information. So we have additional information that we have that we also need to go through before we start to answer. So we have A, B, C, D, E, and then F, and then G being the last one. So the last part that we have is this one. So we are going to go item by item and try to correct and post the entries to where it is necessary. So we go back to where our question is starting. If you go to our answer section, you see that this is the answer section that we have in the answer book. So we are going to have a column for statement received from Gomez or seller and then creditors ledger in the accounting records of previous store. So we are going to have our opening balance that are retained balance. So we try to go back to identify in terms of what is opening balance in the statement received from Gomez or sellers. We can start go at the beginning of the question. And we are seeing that we've got 49,050 that we identified here, which reads, when the source received a statement from Gomez or seller stating that an amount of 49,050 was owed. So basically, that's going to be our opening balance. So we are saying 9,050 for the statement. And then if you go back again, you will see that we are given again, according to the creditors ledger, in the accounting records of previous source, an amount of 56,400 rands is owed. So this is now the opening balance in the column of the ledger. So these are the creditors, this creditors ledger column. So we're going to have our opening balance is 56,125. So basically, that's what we have. Then we go to our transactions, whereby we are going to have additional information A, which reads on 31 December 2023, we source paid the amount owed to Gobies or sellers for the month and recorded the 400 rands discount due to them. This discount did not appear on the statement received from Gobies or sellers dated 25 January 2024. When this was paid, Gobies or sellers acknowledged that they had made an error and promised to rectify it. So you see that there's an omission that is there of a discount on the statements. And obviously, this discount is to reduce the amount that we are owing as a business to Gobies or sellers. So basically, we've got 400 that should be also adjusted on the statement of account. So we can go to our column for statements and subtract this 400. So basically, in the T accounts, on the statement, it should be shown on the credit side of the statement if it's a T account. But since we are given it as a one column, we are supposed to just show it as a negative here. So we are saying we're going to have a minus 400 under the statement column. Go to the next transaction, which is now on the B, which is saying after receiving a statement on 25th from Gobies or sellers, he informed Wimbledon source that closing balance was incorrectly calculated. It should be 40,950 and not 49,050. So we can see that the error, we try to identify where the error is. Is it in after the statement column or the creditors ledger column? So the statement reads after receiving statement on 25th of or 25th from Gomez or sellers, he informed Weebly or sellers that closing balance was incorrectly calculated. It should be 40,950, not 49,050. So it means there is a big amount that was highlighted as our as the closing balance, which we have already entered the year as our opening balance. So it means this figure is bigger. It's supposed to be smaller. So for us to reduce it, we have to subtract the difference by saying uh, we have we have 49,050, this one, and then we subtract the 40,950, and we see that if we subtract it like that, we are going to get I'm trying to see what do we get there. We are going to get our answer is 8,100. So this 8,100 must be subtracted in the column statement so that we reduce this a bigger amount so that it goes back to the correct amount, which is 40,950. So if we go there in the answer section, we are now going under the statement column, and we are saying negative 8,100. So this one the next adjustment that we have that is now on. We're on B, so we're going to the next one, which is C, saying Weebly stores purchases in the of 7,200 from global sellers on 10 January 2024. The bookkeeper incorrectly recorded in the creditors ledger of global wholesalers. So you see that this is global wholesalers. This were purchased from global wholesalers, but it was recorded as global wholesalers. So the error is in the creditors ledger. It's actually indicated. So we're going to correct the creditors ledger column. So we're saying this 7,200 that we put in the Goddess Westerners is not supposed to be there. Because it doesn't belong to Goddess, but it belongs to normal wholesalers. So basically, when the creditors ledger column, we're going to subtract 7,200 because it does not belong there. So we go there and we go to the C and we go under creditors ledger and we're going to say minus 7,200. So that's what we have 7,200. So that's gonna be what we need concerning that. Then we move on to the next part, so whereby we are seeing is now our D. And our D reads on 6 January 2024, Weebly source retained stock of 875 brands together with a debit note to Gomez wholesalers. A credit note was duly received from the supplier, however, no entry was made in statement regarding this return. So there's a returns which took place of 875. And it means in the ledger they were affected, but on the statement they were not showing. So it means we have to go to the statement and adjust them. Remember, on the statement when you buy goods from them, this will be your debit side, and this will be your credit side. When we buy goods from them, and that is our creditor, they debit on their statement. So this is the statement. They debit on their statement. So when returns are affected, they're supposed to go to the opposite side and enter so that they reduce the amount with the amount of returns. So basically, that's what we have. So by going to the credit, it means if it's a vertical column like the one that we are given, we are just supposed to subtract. Because entering on the credit means we are subtracting. So we come here to that we got 875. So we are going to the statement column and subtract 875. So we come here and we are saying this is now D. So we come on this is our statement column. So we say minus 875. So this is what we have. Then we go to the next part. So whereby we are now on E, which means when it source you're not recorded equals 3,800 rands in their creditors ledger. Upon investigation, the owner acknowledged placing this order on first delivered items to his personal residence for a party that his family was hosting. He neglected to inform the bookkeeper of this purchase. So into source books in the creditors ledger. So this is an error in the creditors ledger only. So we have got 3,800 that was entered as if we purchased the goods from a creditor. That is, let's see if we have the name of this. That is Gomez wholesalers. That is the creditor that we thought maybe purchased from. Is a business goods, but they were not business goods. They were personal personal goods of me. Um, it was they were personal goods, so they were not supposed to be entered under the account of Gomez wholesaler. So basically, the value that we have is 3,800. The value of that we have is 3,800. So see, uh, this invoice that was recorded was invoice NW3690, and it was for 3,800. Uh, so see that this is what we get there. So for us to correct it, so if you look on this transaction, you would see that these goods were actually purchased, but the only problem that transpired was that the bookkeeper was not informed about that transaction. But basically, we are saying the transaction should be seen in the books of accounts, which is particularly opposite like what we had earlier explained. So basically, what we are saying, this 3,800 should be uh, shown in the creditors ledger, but in this instance, it's not shown. So we are just supposed to go to the creditors ledger column, and we are supposed to end them. So these were goods that were purchased and were not recorded. So basically, they are going to increase the amount that is being owed to the creditor. So we are going to show it as a positive, as it is increasing the balance that is being owed. So basically, go to our other section and we go under the creditors ledger. And you this item E, and we're going to say plus 3,800. So basically, that's what we get. And we go to the next part, which is now F. On F, it reads a payment of 3,450 made by weekly source to go base or sellers on 24 January 2024 was treated as a credit purchase in the creditors ledger. So you see that we've gotten an error that transpired. This 3,450 um, was a payment. So it was an error that transpired in the creditors ledger. So our creditors ledger, if it is a payment, it's supposed to be shown on the debit side in our creditors ledger, in the ledger. But by mistake, it was shown on the credit. It was shown on the credit as an invoice. So basically, we have got 3,450 that we have on the credit. That's not supposed to be there. It's supposed to appear on the debit side. So we are firstly, we have to put our 3,450 so that we remove this wrong 3,450 that is on the credit, and then we enter the correct one on the debit side. So we're going to enter twice on the debit side. So basically, we are saying 3,450 times 2, or we're saying 3,450 plus 3,450. So we're going to the debit side of the ledger and enter 6,900. That is 3,450 plus 3,450. So by entering on the debit side in the ledger, it's a negative that we're going to show in our column for creditors ledger. So it's going to be negative 6,900. So we go there and we're going to say negative 6,900. So the last transaction that we have, which is an invoice issued by Kobe for sellers of 6,004 on the statement. So statement. So obviously, to the creditor, that's what we have. So we come here. So this now we can now be so if we say 4,050 minus 400 plus 6,450, we are going to get a total of 46,000, 46,125. And go to the minus 7 minus here that will equal with the total that you get in the ledger column. It means we have reconciled correctly. So it means our balances are now correct. So this is what we have on 1.2. So obviously, from there, we are now going on to the next question, which is going to be our question 2. So moving on to our question 2, we have got a bank reconciliation on our question 2, and it is got 19 marks. The question to spend on average 17 minutes on that question. So the question with the information below was extracted from financial records of PV stores for July 2023. The current account is held at A1 Bank, who send monthly statements to their clients on the 27th of each month. So we can take notes. And on the required party, using first party use the information provided below to calculate the correct bank balance as at 31 July 2023, and it is 11 marks. The second part, prepare the bank and reconciliation statement of PV source for July 2023, and it is 8 marks. So moving on to the information parts, we have got information A that we are given there of a bank reconciliation statement for 30 to 2023. So this is the bank reconciliation statement that we are given. And then beneath that, we are given information B, which is the provision of balance in the bank account in the general ledger on 31 July 2023 is 60,555 rands. which is a debit balance, and before taking items below into consideration. So, and items that are being taken into consideration, and this the following items appeared on the July 2023 bank statement, but not in the cash journals for July 2023. So we have the items going down that we also need to go through. The information D, the following items recorded in the cash journals for July 2023 did not appear on the July 2023 bank statement. So and then the last part, the closing balance on the bank statement for July 2023 was a question mark, which means we have to find the closing balance on the bank statement. So having that, we can now try to go to the first part of our question, whereby the first part of our question requires us to use the information provided below to calculate the correct bank balance as at 31 July 2023. 31 July 2023 is the where the year is ending. That is where we have the year ending, that is for July 2023. So basically, calculating the bank balance, we are going to start with the provisional bank balance that we are given in the question. If we come here, the provisional balance in the bank account in the ledger on 2023 was 16,555. So we are going to start with 16,555 as our balance. So if you go to answer section, you'll see that this is our answer section. So here we're going to see 16,555 is our starting balance. But if you go back, you are going to see that this balance is a debit balance. So if it's a debit balance, it means it's a positive balance. So basically, all the other section will also show it as a positive figure. So from there, if you go here, you see that from there, we are also told that we have got information. We can just try to see. From there, we're told that before taking items below into consideration. So we've got items that are following that you need to go through that are going to lead us to the final balance of the bank. So the first item is an outstanding deposit of because the statement that we have on top reads the following items appeared on the July 2023 bank statement, but not in the cash journals for July 2023. So basically, these items that are listed here, they are not in the journals, but they are on the bank statement. So we've got an outstanding deposit of 13,700. An outstanding deposit of 13,700. But if you go back in the question, we are also given a bank reconciliation statement on 30 June 2023. So this is a bank reconciliation on the previous month. Remember, the bank reconciliation statement that we are going to prepare is for July 2023, and this one is for June 2023. So it means it's for the previous month. So when the bank reconciliation was prepared the previous month, this is what transpired. But if you look at it, we have got an outstanding deposit that was there the previous month of 13,700. So if the recent bank statement is now appearing, so for it to appear here, it means it was missing in the last month's bank statement. But for this period, we are being told that it's now appearing 13,700. So it's not going to have any effect. It has no effect. It has no effect because it's something that was already on the previous month's bank reconciliation, and it's now appearing on the recent bank statement. So it means it's corrected. So don't need to correct it, no effect. Then we still need to go to the next one. EFT 1343 appeared on the July bank statement is 2,480, and the amount on the statement is correct. So we are saying the amount that we have here, 2,480, is the one which is correct. So what does it mean? It means the amount that you are seeing, if you check here, it's invoice number 1343. It's EFT 343, sorry, EFT 343. So this EFT 343 has got a correct amount of 2,480. But if you come here, we have this 1343, 1343 EFT, which we have here, which is a question mark. So we need to find out what value is it. We need to find out what value is it. When we find out what value is it, then we compare it with the one that is the correct one that we are given here, and see the difference, so that we can be able to correct what the bank balance. Remember, the items that are appearing here for the previous month is a bank reconciliation statement are items that were there in the bank account, in the ledger, but they were not on the statement. That's why they were updated on the bank reconciliation statement. So in this instance, we want to know that when it was entered in the ledger, it was entered as how much, so that we can be able to see the difference. So to get the difference, we're going to say 30,700. This one, 30,700 plus 29,415. And then we subtract what is on the debit. We subtract 4,895. We subtract 35,300. And then we can get the balance figure here. So that we can be able to know the value. So we are saying 18, 18,700. We add 29,415. We subtract this one, 35,380. And then we subtract 4,895. So calculate it like that. You see that the figure that you are supposed to get there is 2,840. So you get 2,840. So it means this is figure that is supposed to be 2,840. And the figure that is supposed to be there. So this is the figure that we are comparing now with this one. And we see that the figure that is on the correct figure is smaller than the figure that is on the previous month's bank reconciliation. So when it's an EFT, it means it was a negative in the ledger. In the bank account in the ledger, it was a negative as a payment. So it means we subtracted a bigger figure. So by how much now? We are now saying 2,840 minus this figure, which is 2,480. And then you see that the answer that we are supposed to get is 360. So it was, we subtracted a bigger figure by 360 in the previous month's ledger. So what we are supposed to do is we're supposed to add 360 so that we remove the greater amount that we subtracted with. So it's going to be a plus. So if we come to our answer section now, we are going to say this figure that we have as our opening balance plus 360. So this is what we have. Then after there, we can be able to now to go to see in terms of the next adjustment that needs to be done. So we go to our adjustments. We are finished with this one. So the next one is saying EFT number 13494 4,895 is what? They are appearing on the bank statement, but not in the cash journals. But if you see this EFT number 1349, you have to check what the previous month the banks and reconciliation to check if it was there. So you see that 1349 we have in there. It means last period it was in the ledger, but not on the bank statement. But now it's now appearing on the bank statement. So it means it has also no effect. So we can just take note of that should have no effect. So from that scenario, we can now be able to go to the next one, which is now this point for point number 4. Mr. MBEX, a data deposit 5,850 directly into the business bank account in settlement of his state of 6,000. So basically, we are not worried about what the debt was, the amount of the debt. We are worried about the actual amount that was deposited, which is 5,840. And it's a deposit, so it's going to increase the bank balance. So we come here, we're going to say plus 5,850. And we go to the next one. Interest on an unfavorable balance of 385. So the interest, so it's a payment, so it's going to be a negative. It's going to reduce the bank balance. Remember, these items are on the bank statement, but they are not in the journal. So we need to adjust them because they are not there. So you're saying 385. We're subtracting is an outflow. I'm going to go to the next one. You've got service fees and other bank charges totaling 1,420. It's an outflow again. You get 1,420. Go to the next one. Credit card sales to customers totaling 9,630. So this is an inflow because they are credit card sales to customers. So basically, it's a positive. So going to increase the bank balance. So I think 9,630 we add try to go to see. The next one is saying a debit order of 6,400 for insurance. 1,400 for this for the owners is for the owners for personal vehicle. So we are not worried about this part because it's part of this total amount that you want is the total amount that was paid as a debit order. So it reduces the bank balance, which is 6,400. So you could show it as a negative minus 6,400. Go to the next one. From there, now we go to a cash withdrawal from the business bank account of 1,150. This was used to restore the paid cash interest, but basically it's a withdrawal, so it's a negative 1,150. Then we'll try to see on the next one. A credit we are now on a credit interest of 6,500 rands. When the PV stores queried with the bank, it's discovered that this was disposed in error. The reversal of this interest will appear on the under 2023 bank statement. So this one is appearing on the bank statement. It's not here there in the journal, but it's not supposed to also to be on the bank statement. So basically, we cannot adjust it for the bank balance because it's not supposed to be there on the bank statement. So we are supposed to to remove it by adjusting it in the bank reconciliation statement. That is uh, the next the next document that we're going to prepare. So we just leave it. So it means we've adjusted what was supposed to be done. So all the adjustments that we needed to do were adjustments that were on the bank statement, but not in the journals, which were in this section. But this one, we are going to adjust it in the bank reconciliation statement, because it's on the bank statement, but it's not supposed to be there. So it's supposed to remove it, and we can only remove it in the bank reconciliation statement. So what it means is we can now add to get the final total, whereby we are now saying 16,555 plus 360 plus 5,850 minus 385 minus 1,420 plus 9,630 minus 6,400 minus 1,150. And the figure that we are going to get is 23,040. So this becomes the bank balance that we are looking for. Go back to our question. So that the question is saying use the information provided below to calculate the correct bank balance. So what it means is this is the correct bank balance, 23,040. Then the second part is what the preparation of the bank reconciliation statement of PV stores for July 2023. So obviously, at the beginning of it, we are going to start with the balance as per bank statement. So here we are saying balance as per bank statement. Balance as per bank statement. And we can get that balance in the question, so we can just try to go back and see where can we get that balance. You can start by trying to go through everything that we have on our question to try to see if you can see the opening balance that we are going to start with in the bank reconciliation statement. So if you go down, you'll see that it's what we have on this page. There's nothing. You go to this next page, you'll see that starting from where we put our starting information going down. You see that also cannot see the balance that we can start with in our bank reconciliation. So in that case, if you come here, you see that we are only told that the closing balance on the bank statement for July 2023 was a question mark. So basically, it means we are supposed to find the opening balance as a balancing figure. So if you come here on our answer section, it means now, as we know that the bank account in the ledger reflects what is supposed to be on the bank statement. In other words, contents of the bank account in the ledger should be the same with the contents that we should see on the banks in the bank statement. So basically, that's what we. So the closing balance that we have here, that we find as the correct bank balance as a 31 to 23,040, is the same balance that should be the closing balance in the bank reconciliation statement there. because the two documents are the same. So basically, we are going to use this balance to put it there, and then we go up now to find our balance as the bank statement, our opening balance as a balancing figure. So what we are going to do is we can just, well, now we can leave this blank in terms of balance as the bank statement at the beginning, and we go to our question, whereby we are now going to look at uh, items recorded in the K journal, but did not appear on the bank statement. So basically, that's what we are going to do. We are going to start with first point, which is saying a deposit dated 30 July 2023 for 19,700. So this deposit is there in the gauge journal, but it's not on the bank statement like what is stated on D. So I will need to put it in the bank reconciliation statement. We've got 19,700, which is going to go there as an outstanding deposit. So we come in, we are saying outstanding deposit. Outstanding deposits, and then the amount that we have is 19,700. And you know that deposits go to the credit side of the bank reconciliation. So we are saying 19,700. And then from there, we try to see according to the next item that we have, which is say EFT number 1390 for 8,560. So we have an EFT number. This is an outstanding EFT. We can just present it as an outstanding. Outstanding EFT. And we've got a number. We'll try to refer back. It's number 1390 and it's 8,560. So you will see 1390, 8,560. So this is what we have. But then if you go back to the question, remember we've got that item that we've already indicated that it's supposed to be just in the big reconciliation. Uh, it reads a credit entry of 6,500. Thus, when PV stores queried with this with the bank, it was discovered that this was disposed in error. The reversal of this entry will appear on the August 2023 bank statement. So basically, it's an entry that is on the credit side that has to be removed. That has to be removed because it's not supposed to be on the bank statement. So basically, it's a credit entry, so it's on the credit of the bank statement. So by removing it, we go to the debit side. So we're going to say debit amount incorrect credit 6,500. So here we say debit amount incorrectly credited 6,500. So basically, that's what we have. And then from there, we see if we've got any other adjustment that needs to be done. But you see that we've exhausted everything, so we can just try to balance now by saying we now take the balance that we have uh, as our closing balance. This is now the balance as per as the bank account. That should be also the closing balance in the bank reconciliation. So here we can say balance as the bank account. Then in terms of the side that we should put it is a positive balance. You see that it's a positive balance, 23,040. So when it's a positive balance, it is a credit balance on the bank statement. So on the bank reconciliation, it's a credit balance. So, but when we are putting it here, it will be coming as a CD balance. So it should come to the opposite to the debit side. So basically, we are saying 23,000 at 40. And from there now, we can now compare which side is greater. Okay, now compare which side is greater, but by me looking, you can see that 23,040 is greater than 19,700, and then we're also supposed to add 6,500, 8,560. That makes debit the greater total. So if you say 8,560 plus 6,500 plus 2,040, you get a total of 38,100. So we put 38,100, which is supposed to come both sides in between the double lines. And then from there, we can now find this balancing figure by saying 38,100 minus 19,700. Then we get 18,400. So it means the opening balance is on the credit side. It's a favorable balance. So basically, and that's what we have on the bank reconciliation statement, guys. Obviously, this question paper, the next question that we have also, we've got the next question that also that we want to look at. Obviously, it's on the fixed assets. So we are going to tune to the next question that we have. So this is our question 3, and our question 3 is on fixed assets. And we see that our question has got 31 marks and requires you to spend on average 28 minutes on this question. So our question is, you are provided with information for ABC traders, a retailer operating in the Greater Durban area. Financial year ends annually on 28 February. So on the required part, calculate the total amount for depreciation that will be recorded in the statement of comprehensive income on February 2024. Question has got 8 marks. So we are going to go question by question, but on the information part, we're given information A, we're given the balances which appeared in the general ledger of 2024, and also we're given information B, where we are being narrated in terms of the vehicles that we have, in terms of new vehicles that were in, and then the vehicles that were traded in. And then we've got information C, which is going to be the last one, which is vehicles are depreciated at 20% per annum according to the diminishing balance method of depreciation. So this is the information that we're giving. So going back to our question, we're going to start on 3.1, which says calculate the total amount of depreciation that will be recorded in statement of comprehensive income on 28th February 2024. So we need to find out what our assets are. We have got vehicles, but we are given 507,000. That is on 20th February 2024. And 20th February 2024, it's where the year is ending. The year is ending 20th February. So they want the depreciation year ending 20th February 2024. So we come here, you see that this is the balance that we have on 28th February 2024. So from there, we can be able now to go there and read the information B that we have. So on information B, it reads an old vehicle with a cost price of 120,000 rands was traded in for 18,000 rands on 31 December 2023. The accumulated depreciation on this vehicle was 84,000 on 1 March 2023. So these are balances that are given on 1 March 2023. And then the beginning of that is the beginning of the financial year. A new vehicle was purchased on this date for 261,000. No entry has been made in for the trade in or purchase trade in or purchase of the new vehicle. So basically, we are seeing that we've got 3 different types of calculations that we're going to make there. We have got a vehicle that was traded in. It means we've got a vehicle that is going out, so or that is indirectly being disposed, being traded in, which is a cost price of 120,000. We have to calculate the depreciation of that vehicle. So we are saying we have got the traded in vehicle, traded in, we calculate the depreciation separately, and then we've got all the vehicles that we stayed for the whole year. We're going to calculate the depreciation separately. Then we've got a new vehicle which came in. We also have a new vehicle. So we have also a new vehicle. Remember, if you come here, you'll see that it is a new vehicle was purchased on this date for 261,000. So we need also to calculate depreciation of this new vehicle. So we've got three calculations that we're going to do. So we are going to start with the traded in vehicle. Remember, it has a cost of 120,000, and it had this asset had also accumulated depreciation of 84,000 at the beginning of the period. So we need to know how many months did it stay. Remember, it was traded in on 31 December 2023. So it was end of December. So remember, our year is starting starting at beginning of March. So you're saying March, April, May, June, July, August, September, October, November, December. So basically you're saying 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we have got 10 months that we have that this vehicle that is being traded in state. It stayed for 10 months. So depreciation calculation of its depreciation now. Remember our method of calculation that we're going to use is diminishing balance. So diminishing balance formula says percentage times carrying value, where carrying value we specified it by saying cost minus accumulated depreciation. So our costs are there of the traded in vehicle it's 120,000 minus depreciation 84,000. So 120,000 minus 84,000. So you're saying 120,000 minus 84,000. Then we get the carrying value. And then the answer that you're supposed to get after subtracting, you now multiply by the percentage of depreciation, which is 20%. So you come here, you multiply by 20%. And then we multiply, remember, after multiplying by 20%, you get an annual figure for depreciation. But we know that this asset stayed only for 10 months. We counted the number of months there. So I go to multiply by 10 over 12. Get the proportion of the months that the asset stayed times 10 over 12. You will see that the answer that we're supposed to get is going to be 6,000. So we got 6,000 representing the traded in a vehicle. So now we want to go to the old vehicle. We want to now to go to the old vehicle. So for the old vehicle, remember the balance that we are being given here is 507,000. And we are saying these are the balance that we are given at the beginning of the period. We would also have accumulated depreciation at the beginning of the period. So we need to find out costs. So this is the cost that we have. This is representing cost. The cost at the beginning without the 120,000 that was traded in. Well, this one is no longer in the business. We want the old vehicles that stayed for the whole 12 months. So to find them, we are supposed to say this balance minus 120 of the one that was traded in. So for the cost, we are going to say 507,000 minus the cost of the traded in vehicle 120,000. And we are going to get your answer is 387,000. So you're going to get 387,000. And then the depreciation calculation, this is the accumulated depreciation. We're going to say accumulated depreciation that we had in the beginning 273, sorry, 273. Uh, 273,000. Then we subtract the accumulated depreciation that we have for 84,000. So we subtract 84,000 for the traded in vehicle. And then we get 189,000. Then it means now we have got cost at the beginning without the traded in vehicle and accumulated depreciation at the beginning without traded in vehicle. So we are going to just subtract there so that we get the carrying value of the vehicles that were there for 12 months. So we calculate it here. We see that the figure that we're going to get there. Basically, we're saying 387,000 minus 189,000. And then we try to calculate it as such and see the figure that we're going to get there. We're going to get 198,000. So from this 198,000, we are now going to say 20%. Remember, we've got 20%. So you're going to say 0.2, which is our 20% as a decimal, multiplied by 198,000. and we are going to get 39,600. So this is the depreciation of the old vehicles that were there. So we calculated the second one. So already we have calculated the first one and the second one. Now we have got one depreciation of the new vehicle. So for the new vehicle, although we are saying it's a diminishing balance method where I say percentage times carrying value, but for the new vehicle, it doesn't have depreciation, so it's not going. The carrying value is the same as the cost price. So we are going to use 261,000 times 20%. So we are going to say 261,000 times 0.2 which is our 8%, and then we multiply by the proportion of months that it said. So remember, this vehicle was purchased on 1 month on 31 December, 2023, and our year is ending February. It's ending 20th February. So basically it said January and February. Only said January and February, so 2 months. So you go to multiply by 2/10. So the proportion of months said is 2/10. So multiply it like that. Sorry, 2/12. We have got 12 months in a year. You can take note of that. Year is 2/12 because we have 12 months in a year. So multiply by 2/12, and then the answer that we're going to get is 8,700. So total depreciation now, total depreciation is now 120,000. So all this working, you were supposed to, and then we are saying now total depreciation. We are saying depreciation that we have for the traded in vehicle. We got let's just try to see. We got 6,000. So we're giving 6,000. Then we add 39,600, and then we add 8,700. So basically we are saying 6,000, then we add 39,600, then we add 8,700. And then the total that you're supposed to get there becomes the total depreciation that we have. So it's going to be 54,000, 54,300. So basically that's what we have. So this is what we have according to our calculations is the total depreciation. So we can now go on to the next part of the question. For the second part of the question, it requires you to prepare the asset disposal account in the general ledger for the sale of the vehicle on 31 December 2023. That is our 12 months. So all the preparation of our disposal, so of the asset that is being disposed, you put it on the debit side. The amount that we are disposed with, or the proceeds of the disposal, that is going to come through cash or bank. We put it on the credit side if it's depends on how we are going to receive it. And then the accumulated depreciation of that non-current asset that has been disposed should come on the credit side. So basically as simple as that. So we have already calculated the depreciation, so we can be able to calculate accumulated depreciation of the disposed assets. So this is exactly how we are going to what we are going to follow on our disposal. So what our dates is going to be at the end of the period, that is 2024 February. So here all the dates we can just indicate as 2024 February 28th, which is also going to be the same on the credit side, 2024 February 28th. So going back now to check in terms of the costs of that asset that was disposed. Remember, the asset that was disposed is the one that was traded in. As we said, as we are trading in, it's indirectly disposing. So we are saying we have the cost price was 120,000 as we are indicated. So you can just go and put our cost price on the debit side by saying asset disposal is coming from the vehicle. So we say vehicle. And then the amount I remember we say this 120,000. So we're saying 120,000. Then from there, we can now be able to try to find the accumulated depreciation. accumulated depreciation. So we calculation that we made according to that assets, whereby we calculated depreciation for the current period, it was 6,000. So for the current period, 6,000 plus the accumulated depreciation that was there at the beginning of the year, which is 84,000. This was at the beginning of the year. The accumulated depreciation on this vehicle was 84,000 on 1 March 2023, the beginning of the financial year. Then we say 84,000 plus 6,000 for this year, 84,000 plus 6,000 for this year. You get your total is 90,000. So we go there, we go to the credit side. Now we are saying accumulated depreciation. So we can just accumulate it and depreciation, you can write in full. Then in brackets, you're supposed to indicate the working by saying 84,000, 84,000 plus 6,000. Then you get your 90,000. So basically, that's what we then we also have another part that we need to, which is the cash or bank that was used when we disposed, that we received as we disposed. So if you go back to our explanation that we have, they are saying it was traded in for 18,000. So 18,000 is the amount. And but this is not coming as an amount because it's a trade-in. So it's going to be part of the value of the new vehicle that is coming in. So we come in, we are not going to put our cash on bank like what we have here. We can put the vehicle that we are going to that is going to be purchased. So we are saying vehicle, and the amount is 18,000. So from here, you can now be able to compare the debit and the credit to find out if it's a loss on disposal or a profit on disposal. So after entering these three elements, you can able to see which side is greater. So if you look at it, you're going to see that the debit side is greater. But because when you say on the credit side 90 plus 18, you're going to get 108, 108,000. But on the credit, we put 120,000. So it means the credit side is greater, the one that is going to come in between the double lines, both sides. So we are giving a balancing figure on the credit side, and the balancing figure is supposed to be transferred to the profit and loss. If we say 120,000 minus 108,000, then we get a balance of 12,000. So the double entry involved with this 12,000 that we got there on the credit side of the disposal, we are going to say we are debiting profit and loss, and there we've credited disposal. So very exactly scenario, you'd see that this is the double entry for loss on disposal. So it means the opposite gives you profit on disposal. So by debiting profit and loss, we know that all expenses go to the debit side of profit and loss. So it will be an expense in the form of loss on disposal. So if it was a profit, it was supposed to credit profit and loss and debit disposal. So if this balancing figure was on the debit side, it was supposed to be profit on disposal. So this one is loss on disposal. So on the description here, you can just say profit and loss, or you can alternatively, you can write it as loss on disposal. So this is what we have in this part, and that is asset and disposal. Then we go to the next part of our question, which is now 3.3, and let's calculate the amount that's carrying value of vehicle that will be recorded in the fixed or tangible asset note to the statement of financial position is at 20th February 2024. So obviously we need to present it in the form of cost minus accumulated depreciation, then we get your carrying value. So the question is asking us the carrying value at the end. So if you go to our answer section, you are going to see that We can just maybe try to. So this is the part that we have. So we are saying to get the carrying value, it's supposed to cost minus accumulated depreciation. And we want to find the cost at the end of the period. So to get the cost at the end of the period, we are saying um, what we had at the beginning, the cost that we had at the beginning, 507,000. So we are saying 507,000. This is the cost that we want to find. And then we have what was disposed is 120. We subtract it because it is something that is going out of the business. But we also have what was purchased. So if you go to the, you see that we got 261 that was purchased here, 261. So it's an addition plus 261. So this is what we. So if you calculate it like that, you see that the other value we're going to get is 648. 648. And then this is the cost. Then accumulated depreciation now, we are saying also accumulated depreciation that we had at the beginning is 273,000. Minus accumulated depreciation of the vehicle that is going out, which is 84,000. Plus we are supposed to subtract your 84,000. And then we subtract our 84,000. And then also, or alternatively, we can just maybe do it this way so that it becomes simple for you to comprehend. We just subtract the total accumulated depreciation of that asset, total accumulated depreciation of that asset that is been disposed. Remember, we calculated we said 84,000 that we had at the beginning, plus the depreciation for the year for the traded in vehicle, we get total accumulated depreciation of 90,000. So basically, you can just say minus 90,000 so that it becomes simple. And then we add the depreciation that you got for the year. Remember, we calculated depreciation for the year, and we got 54,300. This one. Then we add it. Then the answer that we are supposed to get is 237,300. And then we now say this is our cost. This is our cost, and this is our accumulated depreciation. So basically, we are saying cost minus accumulated depreciation. So we are saying 648,000, and then we subtract 237,300. And then the figure that we are supposed to get is 410,700. So this becomes the final figure that we have. And obviously, we have other questions that we have about this question, and we try to refer back. So we are now on 3.4, saying the owner notices that the mileage on one of the vehicles is extremely high. He therefore concluded that the driver is misusing the vehicle, suggests two control measures that can be implemented to safeguard the business against misuse of vehicles. So basically, obviously, we are supposed to come up with strategies that comes as maybe internal control measures that those vehicles cannot be misused or overused. So we go to other section and try to see in terms of the explanations that we have on terms of such. Or these are the control measures that we have. The first one each driver should receive a signed trip authorization form before embarking on trip or using vehicle. Then the second one, drivers should complement a log sheet. They should complete a log sheet for each trip traveled. So there should be a completion of a log sheet before each trip is traveled. So we also have appoint a transport officer to inspect each vehicle. And then any other logical answers also can be correct. So remember, our question only requires 2 points, so you can just try to look for uh, 2 points. So these are the points that we have, and this will be the end of our question 3, and I will see that our question 3 is got 31 marks. So this is what we have on this question 3. Obviously, on this question paper, we still have another question, which is going to be question 4.